the price of gold was trading at 1196.20 when the report was published, and it identified the average price to be at 1251, and with the market closing below 1251, we came into the next 360-day cycle with a bearish sentiment. But it prepared you and it told you that if the price was to close above 1251, which was the average price for 2019, that it would activate the extreme levels above the mean of the sell 1 target of 1336. It also identified the second target above the mean of 1476. The VC PMI artificial intelligence tells us that when the price reaches the extreme level of the sell 1 above the mean, it usually identifies the 1-to-1 extreme relative implied volatility. And the artificial intelligence identifies this as a 90% probability that when the price kisses or crosses this level, that it activates a new setup. The AI continues to tell you a methodology for you to identify the trigger point of the next level where we can expect the reversion to the mean to unfold. And in this case, after the market on February 20 made a high of 1356, it completed the target and it went neutral. The VC PMI artificial intelligence told you at that point that if the price closes below the sell 1 level, after activating it, it would generate a bearish trigger point or a short signal trigger point. And automatically it activates the target of the mean of 1251. As we take a look at the price of gold after making the high of 1356 on February 20th, which corresponds to approximately the 180-day cycle. Correspondingly, after activating the short signal on the 21st of February by closing below 1336 at 1334.30, it activated a short signal, long term. And the structure that the VC PMI, artificial intelligence, is able to identify for us is that when the price activates a signal, and in this case a short signal, it activates automatically the level below. And in this case, it's the mean of 1251. The low that was made April 18th was 1273. If we continue to use the same metrics, it appears that we're very close to a potential activation and completion of the reversion to the mean from that 1356 or 1336 target completed, posted on September 28, 2018, prospectively anticipating that target in 2019. We want to be aware and prepared and be looking for a completion of this correction or reversion to the mean that we're experiencing to take place anytime over the next few days. In trying to identify the intermediate levels, let's take a look at the weekly VC PMI trading instructions and see what they're telling us for the coming week. As we take a look at the April 19th report, the price of gold on Friday closed at 1276. The first filter of the VC PMI is the 9-day moving average of 1305. With the market closing below 1305, it's activating a bearish weekly trend momentum as we come into next week. But the artificial intelligence also tells you that if the price was to close above 1305, that it would negate this bearishness to neutral. The second filter that we use is the weekly price momentum indicator, or what we call the VC PMI, at 1281. And with the price once again closing below 1281, which is the average price, pivot point, or equilibrium for the coming week, it identifies a bearish weekly price momentum as well. When the VC PMI identifies a bearish trend momentum or a bearish price momentum, it also activates the extreme levels below that mean. And in this case, it's telling you that if the market comes down to the 1268, it activates a buy one level. And if you are short, cover your positions and reverse to the long side. The buy one levels as we come into next week are 1268, which is the extreme level below the mean of 1281, and the B2 level is 1259. Once again, the VC PMI extreme levels below the mean of by one level is the 1-to-1 extreme relative implied volatility that mathematically identifies for you that when the price touches this level and reverses from here, it's a 90% probability that the reversion will occur coming back up to 1281. When the price reaches B2, it's a 95% probability that the reversion will unfold and the price will revert back to 1281, which is the average price for this coming week. If we close above 1281, it activates the sell 1 level above the mean of 1290 and the sell 2 level of 1303. Note, the yearly average that I identify just a little bit ago here, correction, the annual moving average of 1251 that I identified above comes very close to the B2 level of the weekly of 1259. And so I think what we're looking at here is what the VC PMI calls a potentially harmonic alignment developing between the weekly and the annual levels that have a very high probability that the market reversion to the mean will unfold. And so if we take a look at the previous report that I mentioned, the annual report just mentioned, the upper end of that extreme above the mean annually of the sell 2 level is 1476. And so it appears that we are at the extreme level below the mean on the long-term basis and the intermediate basis into what is a highly probable harmonic alignment that could unfold a very strong reversion back up to the mean. If we take a look at the monthly by one levels, the VC PMI identifies them to be at 1274 to 1255. What this represents is that what we have been able to identify here is a cluster or a vortex, you might say, of the price alignment taking place weekly, monthly, and as we come in on Monday, we want to take a look at the price relationship into these levels that appears to be extremely supportive of the market bottoming daily, weekly, monthly, and annually. One of the things that I want to point out to you is that this combination or this harmonic alignment relationship that we're looking at right now is extremely unusual when this occurs. And if we take a look at this, or if we interpret this as a mathematical probable model, what it's saying is that we're very close to even a 95% probability that the markets are going to turn short-term, intermediate, and long-term, and we're going to see a reversion in the price of gold, potentially with a target of 1476 throughout the rest of 2019.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.